As the war in Middle East turns hotter, gold seems to be getting more expensive. The price of 24 karat gold increased by 270 rupees to over 60,760 for 10 grams on Friday. The price of gold in the US also reached its highest in 3 months on Friday, setting it up for a second straight week of gains driven by heightened demand caused by the ongoing conflict in the Middle East. Prices of spot gold touched nearly $1985 per ounce after having reached its highest levels since 20th of July this year. As far as oil prices is concerned, that is also inching up, hovering around 92 to 93 dollar a barrel. Both gold and oil becoming dearer with each passing day. Let's understand what's happening here. Kunal Shah, Head of Commodities Research, Nirmal Bang, joining us on the show. Kunal, good to have you back, sir. Thank you for taking time out. Let's first understand what's happening with the gold prices. Gold prices inching to nearly 2,000 dollar an ounce mark, becoming dearer with each passing day, reaffirming a popularly held belief that in times of uncertainty, you go to gold.
Yes, it's the fear premium, which is basically caused the gold prices to shoot up the way it did. So the escalation in the geopolitical crisis in the Middle East is one of the reasons why gold prices have shot up. Apart from that, there are many reasons which makes a very strong case for gold to continue to do well going forward during next year also. And after we've seen the escalation in the crisis in Middle East, gold prices have shot up by almost $150. So it's quite a humongous rally as far as gold is concerned. And in spite of the rising yields, in spite of the stronger dollar, we have seen relentless buying taking place in gold, massive short covering on COMEX, that is the US exchange, and massive buying in the physical market ex-India. We've seen China gold premiums shooting up by $55-$60. So if you are buying gold in the spot market in China, then $60 higher premium is basically quoted right now. In Turkey, the premium is as high as $90. So quite a time for gold, and it continues to do well, like you said.
All right, my colleague Suyash has very diligently drawn up a graph of how gold prices have been over the past couple of years. They've been important and very big black swan events, and very repeatedly so. COVID, the Russian-Ukraine war, and now the conflict in the Middle East. Prices have spiked up during each of these events.
I mean, as you rightly pointed out, Shweta, at a time of crisis, investors go to gold. And I mean, if you look at the charts, I mean, I won't take all the credit. Our producers helped greatly. They, drew out this wonderful chart for us where we have seen spike every time. Now, the first, the run-up that you're seeing is because of the COVID impact. Now, the cost of funds was lower. There was such uncertainty after the COVID crisis. So, we saw a sharp spike in spot gold prices, and in fact in August of 2020 gold touched a lifetime high of 20,075 levels. After that there was a bit of volatility and correction, but then the gold prices spiked again after Russia's invasion of Ukraine. Now I think Russia invaded Ukraine on February 24th, 2023. Over the next couple of weeks, gold prices rallied at about $100 to breach past that $2,000 mark and reach a high of around $2,070. Now coming back to the Israel-Hamas war conflict. Israel-Hamas conflict in the last couple started on about October 6th, right? Since then we have seen about a $180 jump in gold prices, in the prices of spot gold. Now this is week 2. In week 1, gold prices, the spot gold rallied by about 5%. In week 1 it rallied by about 5%, and in week 2 it has already rallied by about 3% or so. And if you see, we are just 15-17 points shy of that 2000 mark and about $90 shy of that all-time high level, Shweta.
All right, so just $90 shy of that all-time high level. And given, Kunal, if the uncertainty continues, which it's likely to continue, we are nearly on the second week of the war. It's been almost about 14 days since the war started. Are you of the view that prices of gold are only going to get more expensive from here on? Is there some correction that you see in the pipeline, perhaps?
See, the profit-taking correction will be the part of the bull run going forward. But we believe that this Middle East crisis have basically come to the fact that now the geopolitical landscape is worsening at a much faster pace than earlier thought. So each new regions are basically getting engaged in this. So earlier it was West versus Russia, China versus Taiwan, and now suddenly we have entire Middle East versus Israel, and so the strongest ally of Israel is the US. So it seems that some or the other way, naturally, we are seeing more and more countries are getting involved in the geopolitical conflict, and that is very supportive for gold. It flags uncertainty in the markets, and whenever the uncertainty or fear in the system, gold generally performs to do well, and that is what is happening this time. And this is not going to last soon, as per my understanding. And I'm expecting, gold prices to remain quite buoyant going forward, and it is going to move up significantly in months to come.
Mr. Shah, we are just $90 away from that all-time high level, just about 4.5% shy. Do you expect us to breach those levels?
Yeah, eventually it will. So it's just a matter of time, maybe a month or two. It is bound to break those levels. So when I compare gold prices with the way central bank's balance sheet have been expanded over the last couple of years, except last 1 year, where the balance sheets have been shrinking, gold prices are highly undervalued. And even if without this last recent war, my base case scenario was that gold is likely to test $2,400 per an ounce in 2024. So I am very bullish, irrespective of this war has added more fuel to the fire, and the upside what we saw was quite abrupt. And the way things stand at it right now, so along with the Hamas, we've seen Lebanon getting involved, Syria, Yemen. So all these countries are getting involved, and this doesn't look nice. Even Iran, to a certain extent, not directly, but Iran is also involved in this, getting involved in this matter. This is not looking good, from a political point of view, and this is definitely not going to solve immediately until some miracle takes place. So. Very bullish call
well,
on
we
gold
all
going
hope
forward.
that the miracle does take place. Yes,
But
Suyash.
that's a pretty, bold prediction coming from Shah, Mr. Kunal Shah. He expects gold to touch $2,400 by the next year. So I think
perhaps
that's
those
a
who are
big
waiting
target
to buy should buy now.
They have to, $400 upside. We have prediction coming from Mr. Shah. Mr. Shah, silver prices have also done pretty well. Between the two, which precious metal do you prefer?
So fundamentally, silver also looks very attractive. The silver deficit at the start of 2023 was somewhere at 220 million ounce. Is expected to widen to almost 300 million ounce this year by December. And the supply side continues to disappoint, whereas the demand side from the solar mainly been a major catalyst for silver. So next year, we are expecting higher consumption, higher deficit. So fundamentals are pointing towards a very bullish scenario. Right now, because of the ongoing Chinese slowdown, where the metal prices continues to suffer, silver is underperformer. But it's just a matter of time. We are going to see any major spike in gold, and silver shall follow. So silver also, I'm very bullish. And
Kunal, how does the robust numbers from China for the July to September quarter changes the future of commodities? And there is demand, and it's likely picking up.
Well, it's just green shoots, some of the very early signs that things are bottoming out. But as far as the robust growth is concerned, I don't see any signs of robust growth. So China's government doesn't have much of ammunition power right now. So I think they are allowing their economies to go down on its own weight, and a gradual decline in the economy is something what we have been witnessing. So going forward, I'm not a great bull on China, and I think some bounce will
Do you
come.
not believe those numbers, Kunal? Not too
No,
confident about those numbers?
no, I think it's just after, it's like after a continuous drop in economic activity, we've seen some bit of pullback, but I would not give much importance towards this, because the backbone of the Chinese market is real estate market, and real estate market in China, which accounts for the 25 to 28% of the GDP, continues to suffer.